Okay, guys, welcome back to our YouTube channel, and today we are still going to be discussing high probability setups, right? High probability setup. Now, let's look at this. Price is ranging, right? Price is doing something like this. Then price breaks up, and price did something like this, and upward it bought, right? Now, there are two scenarios, because first of all, what we see price did was that price accumulated and then expanded. It reversed to touch our zone right up here, and then our demand zone, and then breaks to the upside. Now, okay, what I usually do is I mark up this kind of stuff right here. I mark up like this, and I do something like this. Now, we're going to be looking at two scenarios. This is scenario one. This is scenario one. Okay, this is scenario one. And if scenario one happens, I will gladly take my buy from here. We put my stop loss 20 pip stop loss. Let's just leave it because this is gold. If it happens on other pairs, I put my 20 pip stop loss and I target 1 to 3 or thereabout, anywhere you want to target. This is scenario one. Now let's look at scenario two. Price is doing something like this. Up, down, up. Price drop. Took out all the buyers, swept, broke structure, came back. Now in this case, I'm not going to take my sales from up here, and I will tell you the reason why I'm not going to take my sales from up here. Rather, I will take my sales from down here, or an order block that will be within this range here. Then the expansion. This is where I'll choose to go long from. Why is it? Now, because, okay, I'm coming. Let's have this here. Right. And let's have this here. Now, we see price accumulated here, manipulated, and then expanded. Now, the reason why I did not take my buy from up here, from this supply zone that became a demand zone, is because of this manipulation. Okay, or this resistance, the resistance here. Now, support becomes resistance, demand becomes supply, blah blah blah. Now, the reason why I did not take my buy, again, the reason why I did not take my buy from this level here is because of this manipulation. This manipulation changes everything that happened, everything that was supposed to happen like this. You see this guy, there was no manipulation, but there was a break. So if you see something like this, what happened? You enter from here and take it up. I'm not expecting price to dip down within this range here because there was no manipulation. From the manipulation, I may look for an order block, maybe somewhere around here or at the extreme order block, or just within this range from this manipulation up towards before the break. I may look for other blocks or fair value gaps to take my entries from. But because this guy here did not manipulate, I can't look for fair value gap. I'll just take it from the resistance that becomes a support, look for my confirmation or whatsoever, and buy upward. High probability, they are all high probability setup. So whenever you see them, you take them. Now let's look at, we are on gold, right? Please make sure you screenshot this thing because you always see them play. I have a setup. I drew a setup for this on 1000. That's volatility indices or derived indices, as we may call it. Okay, now let me show you what's happening on gold. Which scenario is this? Now, okay, let's name this guy scenario 1. Right? So from looking at this now, guys, from looking at this, what scenario is happening here? What scenario is happening here? What scenario is happening here? I strongly believe it's scenario 2 because of this manipulation. So if you say scenario 2, you got it right because of this manipulation here that happened. Okay, because of this manipulation, so that means it's scenario 2. I mean, I'm looking for price to drop back into some levels within from this range here, for price to drop back into that level, and then what will happen? We move up. I'm highly expecting that. So for now, I just want to be selling good. I just want to be selling good.